And we are live. Welcome to the Noble Credit Podcast. This episode is going to be a training on the VA loan and the home buying process for first time home buyers. Hit the like button because this is about to get real in depth. Just to let you know that you are in the right place. I am an active duty service member. I've used the VA loan a number of different times. I've used multiple mortgage and loan vehicles multiple times. So I know what I'm talking about from a VA home loan buyer's guide perspective. Uh, Considering that I've used the benefit multiple times, I can speak directly to active duty service members using it. Also, I can speak to veterans and their ability to use it, as I've done a significant amount of research in order to use the benefit, which is what you're doing right now. You're doing your research and you are in the right place and you're doing what you're supposed to be doing, because I recommend you go into the situation with the knowledge so you don't feel like someone's trying to get over on you. So you don't go to the closing table and see a bunch of fees and think, wait, I thought that there were no closing costs. No, there's actually no down payment. There are closing costs. The VA loan, however, does have closing cost caps to it. So, welcome to those of you who are just joining the stream. Hit the like button if you are on your way in. This is about to be really good. I highly recommend that you share this with another service member who is considering purchasing a house. Even the consideration of purchasing a house, I'm going to recommend that you do that because this is the best vehicle at your disposal to building wealth. I have a video on my channel about the 7 ways to become wealthy in the military. This has got to be the number one way. Okay. So without further ado, let's get started. What is a VA loan? A VA loan, a Veterans Affairs loan, is not issued by the Veterans Affairs. It is a guarantee from the government to a lender, lenders who offer VA loans. It is a guarantee that the government will cover the loan should you, as a service member or a veteran, foreclose on it. This is why you don't have to have a down payment for a VA loan. Now, does that make sense? It makes sense because the reason why down payments are required is so that a lender at least recoups something if you move into the property and 2 months later you stop paying the mortgage. At least they have something showing that, their investment or their loaning out, their lending practice wasn't completely for nothing. Okay, so the Veterans Affairs, it guarantees the loan to the lender. Now, who is eligible for a VA home loan? Active duty service members with 90 plus days of continuous service, which just means if you go to boot camp and you fail boot camp, because boot camp is less than 2 months long, it's around 2 months long, 60 days, and you think that you're a veteran now because you failed boot camp, you don't qualify for a Veterans Affairs loan. Okay. So it has to be 90 consecutive days on active duty. Or if you're a reservist, if you're a veteran, you qualify if you have an other than dishonorable discharge. So if you have a dishonorable discharge, you lose the ability to use a VA loan. Now, I know that's uh, sad for some of you or some people out there. Hopefully, everybody who's gotten out, you get out with an honorable or an other than honorable discharge. Uh, so, are there any fees associated with the VA home loan? Yes. There is something called a VA funding fee, which I just did a live stream on 2 days ago. In 2023, the VA funding fee went down. Now, what is the VA funding fee? The VA funding fee, it's a way for the government to uh, to maintain the program. So you would think that a program where no down payment is required and the taxpayers are pretty much footing the bill for all of these mortgages, service members kind of get away with walking into a property with no money down and no out of pocket costs. Uh, Not quite. The VA funding fee is a way to kind of remedy that small issue and put some onus on the service members, or other than a service member, a surviving spouse can qualify for a VA loan. But it's a way to put some onus on them. So the VA funding fee for first time home buyers is 2.15% starting tomorrow. So right now, currently, the VA funding fee is 2.3%. Starting tomorrow, April 7th, it's going to be 2.15%. And if you're using your VA loan subsequently, so another VA loan, it's going from 3.6% to 3.3%. And that's what I did the episode on a few days ago. This saves you thousands of dollars. It may not seem like it does, but it does. It's the difference between about, let's say you have a $400,000 mortgage. The VA funding fee is going to be 3.6% if you're using your subsequent VA loan benefit. So that's going to be about $15,000. Yeah. And so when it goes down to 3.3%, that VA funding fee becomes about $13,000. Okay. So it goes down by a few thousand or almost a few $1,000s. And that's big because what I recommend that you do, or I should say what I would do, because I can't give you financial advice. I just have to give you the information and you do with it as you may. What I would do with the VA funding fee is I would lump it in to the closing costs. I would lump it into the loan. Reason being, because I want as little out of pocket expense as possible. Take a swig of water before I, start going off and getting started. By the way, hit the like button for me. Appreciate it. All right. So I talked about the VA loan funding fee. And let's get on to who qualifies. Well, we already talked about who qualifies. I talked about active duty service members, reservists, National Guard, reservists who got out with like honorable discharge, National Guard, and surviving spouses. So if you're the spouse of a service member who died, you may be eligible for a VA loan. Now, are there any loan limits to VA loans? No, there actually aren't any. Uh, it depends on the county. If you, it depends on the county, and it depends on if you're getting the full entitlement. So, like me, someone who's used their VA loan a couple of times, I do not get the full entitlement, and I'm still going to be under the limits for the county and also under the limit of what I can afford. So a lender's not going to give you something that you really can't afford, that you don't qualify for. But there are no loan limits for a VA loan. That change happened years ago. But it basically, if you live in like San Diego and you're on active duty, you can buy $1 million house if you qualify for it. That's the thing. You have to actually qualify. So you have to make enough money to actually qualify for $1 million mortgage, which most people will not. Or if you live in a place like Hawaii and the average cost of a place to live or a house to live in is over $700,000, you kind of have no choice but to be able to qualify for that. So, all right, next we're going to talk about what if I want to buy a home while I still have another VA home loan. So we're getting a little ahead of ourselves because I'm assuming you're a first time home buyer. And if you're not a first time home buyer, you need this too, because then I'm also going to talk about the subsequent homes and get into a little bit of that strategy. But if you want to buy a home while you have another VA home loan, one of the things you can do is you can rent out the first home, but you have to use that next home as a primary residence. Why should you choose a oh, and you can also sell your VA home loan and get another VA loan and just get your full entitlement back if the selling of that loan pays for the entire loan. So, why choose a VA loan? Okay, so this is the part you got to pay attention to. There's no down payment, so that's huge. There's no other loan like this. There may be some special program out there, some fringe program for maybe a certain demographic of people, but there's nothing to my knowledge out there that allows you to move into a house with no money down and first time home buyers, a lot of times you guys are going to get some benefits from the government because the government actually likes for you to be able to purchase property. So there are going to be some incentives in there for you guys. There's no loan limit. We already talked about no loan limit for the full entitlement. They have competitive terms and interest rates. So by competitive interest rates, VA loans, the interest rates are usually amongst the lowest. And you don't actually have to qualify more than uh, y- y- you can get a VA loan and you can be less qualified than trying to get a conventional loan. So you can start talking to a lender even if you have a 580. Now they want you to have like a 620 at least, but you can still get your foot in the door. There are still ways uh, for you to get a loan using a VA loan. Uh, but that's not the case a lot of times with a conventional loan. They want to see a good borrower. They want to know that your credit history is on point. There's also no need for private mortgage insurance, PMI. PMI is so if you have a conventional loan and you don't pay 20% as the down payment, you're going to be paying something called private mortgage insurance. And this is insuring your loan. You are paying the insurance for the lender. So you don't, this money doesn't go towards principal. Principal is the actual amount of money for the loan. So when you're paying your mortgage, you're paying the principal down. You're also going to be making interest payments, but you're paying that principal down. This PMI, it doesn't even go toward principal. Okay. It doesn't go towards interest. It doesn't go towards principal. It's going to be about 2% of your loan every year. So if you have a $200,000 home, or if you have $100,000 home and you have to pay 2% every year, that's going to be at $2,000 every year. So it's going to be split up by 12. So monthly payments. And this does not go back to you. And this is something that a lot of people have to pay because a lot of people cannot afford a 20% down payment. So they end up having to come out of pocket with PMI. Okay, and there are fewer closing costs to a VA loan. Now, closing costs are basically costs at the end when you go to sign and you see things on there like lender fee and lender tax fee and document creation fee and underwriting fee, a bunch of fees on there. A lot of it's not going to make any sense. Appraisal fee, you're going to see a lot of those. What the VA loan does is it limits those fees. So once you get to the table, because you've watched videos like this, you are going to be more knowledgeable. And so someone who's not familiar with the VA loan buying process and doesn't listen to something like this, they might see all of those fees and think, "Oh, these fees are out of line." Well, you know, the government is going to have a way to. So there are going to be different services out there that they banks can't just do what they want. Credit unions can't just do what they want. No, there are audits in place. So make sure that people aren't doing um, what they're not supposed to do, not taking advantage of people. So rest assured that even if a mistake is made on the back end, you're actually probably going to get a credit for it. They're probably going to send you something a few months later that says, "Oh, we overcharged you for this." But generally speaking, that's not going to happen because the lenders who are allowed to use VA loans, they know the rules, generally speaking. But I do recommend having this knowledge before going into a VA loan because it just equips you and it's going to allow you to be a smarter shopper because once we get into the next section about rate shopping, that's where you want to be. That's where you want to secure your family's future. And welcome to the stream. If you are just joining, so we got a comment. He says, "Is it true that a 100% disability veteran doesn't have to pay the funding fee?" That is true, Mr. Lyles. And thank you for the comment. You are actually the very first chat that we've had on the Noble Credit podcast. Welcome. So, yes, the VA funding fee, you know, disabled veterans get all the luck. No, disabled veterans with 100% disability do not have to pay the VA funding fee. So this saves the disabled veterans a lot of money. Fortunately for them, you know, uh, they don't have to roll a VA funding fee into their loan as well. So this easily saves them. This saves them so much money. Think about it. If you live anywhere that's kind of like a high cost of living area, you're probably going to be running a little over $400,000 for a home loan. The VA funding fee for that home is going to be around 15,000. Let's call it 15,000 just for math's sake. If you have to roll $15,000 into a $400,000 mortgage, now your whole loan is going to be 415,000. But wait, that VA funding fee added all that money. That's a lot of time. So you increase your mortgage payment when you, excuse me, when you have a VA funding fee, you increase your mortgage payment and you increase the amount of time that it's going to take to pay off that loan. Well, not really the amount of time because it's always going to be a 30-year fix, but uh, different things are going to happen to you in life. You're going to need to refinance at some point. I know this is getting a little more in the weeds, but just explaining this for uh, for those of you who need to know that the VA funding fee, although it is going to be assessed to you, is going to push your the time that it's going to take to pay off the loan back. Now, am I overly concerned about paying off the VA loan? I'm not. Why? Because I'm an investor. All right. I'm using these properties as investment tools to build my wealth. Now, I'm not concerned about a 15-year mortgage. I'm not concerned about a 20-year mortgage. I'm concerned about 30-year mortgage. Give me 30 years. Okay. I know there might be some instances where they're offering more than 30 years, but I wouldn't take those personally. So we've talked about who's eligible. Now, every lender is going to have their own requirements as well. So you're going to need to have some minimum standards for credit. You're going to have some need to have some minimum standards for income, and you're going to have some other requirements that are required. You're going to need to send in page tax forms. You're going to need to send in your certificate of eligibility. Certificate of eligibility for those of you who are active duty, you should be able to get this from your personnel office. It's also your commanding officer should be able to provide this for you. You might have to route a request for it, but just ask your personnel office for your certificate of eligibility to be able to use your VA home loan uh, benefit because they just need to see a certificate of eligibility says that you are, an active service member. Easy enough. And when they give it to like the CO, let's say you were in the middle of, a non-judicial punishment hearing or you're about to get court-martialed. The CO is probably not gonna I don't know this for a fact, but if you're, trying to buy a home right before you get court-martialed and the CO doesn't know if you're about to be dishonorably discharged or not, they're probably not going to provide that certificate of eligibility for you because they know you're about to be dishonorably discharged. Okay. So the VA does not determine how much you can borrow. That's going to be up to the lender. Every lender is going to have their different requirements, but uh, the VA is going to back that loan and guarantee it for the lender. Now, let's get on to looking at your current financial situation. So, before you go searching for a lender to get a VA loan through, you have to make sure that your personal credit score, your personal financial situation is kind of situated. I'm not saying you have to be fully decked out 800 credit score. Let's just let's just get the simple things right. Have you been paying all your bills on time for the past 12 months? Good. Have you avoided any bankruptcies? Good. See? Simple things. Easy things to take care of. You know, are you keeping up with your expenses? Are you making sure you're saving enough money so that should you need to put an earnest money deposit down for a property, earnest money deposit is an amount of money that you can put down to secure your spot. And let's say, for instance, if it's a new construction property, uh, they want to know that you're a serious buyer. So you're going to have to put down an earnest money deposit. Earnest money deposit says to them, hey, I'm serious. Here's this money that's going to go towards my closing costs once we get there. Now, the earnest money deposit is usually refundable, but it's just a way to show them that you're serious. And your earnest money deposit is usually you're going to have to pay that in the form of a bank wire. Now, bank wire fraud is very real. I've been reminded this number of times. I've not been a victim of bank wire fraud. I've just been reminded of this. I want you guys to please cross your T's and dot your I's. Whenever you're sending in that earnest money deposit, call the person that you're sending it to, call the lender, double check that you sent it to the right spot. Uh, do whatever you can. Annoy them if you have to. Call them, let them know, hey, I just sent the earnest money deposit. I just wanted to make sure that you got it. Yep, we have the wire right now. Good, thank you. That's all you need to do. Okay, because it's going to be a lot of money. And also, the same thing with the down payment. If you choose to do a down payment now, you shouldn't. However, you may decide to do that. I think it would be a mistake, but you do you. Why do I think it will be a mistake? Because I am a believer you use as little money as possible out of your own pocket to secure these properties. Because in investing, I think that your best avenue is using the bank's money to fund your investments, not your own money. So you can easily move into a VA loan paid for property with no money down, very little closing costs, and then you never really had to come out of pocket. You have maybe a little bit of closing costs, but you can always roll that into the loan. So you literally walk into a home for no money. You can't even do that with an apartment because you need a security deposit. It's almost like buying a home is cheaper than renting, which I mean it's not that's not totally true. I would say buying a home is more worth it than renting. Renting is definitely more expensive in the long run. Buying a home is your best bet, especially with the VA loan, like the video. Please let me take a swig of this water. Give me a second. All right. So, step one, get your certificate of eligibility. For those of you who are veterans, obtaining your certificate of eligibility, go ahead and I would say go on the Veterans Affairs website and just check to see how to obtain that. I think your DD 214 should be enough to gain your COE, your certificate of eligibility. Uh, Step two, make sure your current finances are in order. Decide how much you can afford, how much you think you can afford. There are plenty of calculators online where you can see how much home you can afford based on your income. Step three, choose a lender. Now, I have a step 2.5. I want you guys to do your research. This is a good this is a good place to start for doing your research because you want to be knowledgeable going into this. Part of your research, I want you to know the interest rate. I want you to know the current interest rate in the market. I want you to Google search current interest rate today. And when I Google search that, the current interest rate today is I actually don't have that up. I think it's like a 6.8. All right. I want you to understand what rate hikes are. The Fed is currently doing rate hikes. Rate hikes are an attempt to curb inflation by the federal government uh, or by the Federal Reserve. The Federal Reserve, they try to control the flow of money into and out of the economy so that the dollar doesn't lose as much value. So they have to increase interest rates to kind of discourage people from borrowing so much, which lessens the value of the dollar. So if interest rates are super low, anybody can get into a house. So they try to increase interest rates to kind of only let people who are qualified, because when interest rates go up, the prices of these homes go up as well because you're paying way more for the home. And in this market, the prices of homes are going up. Now, a few months ago, when it was more of a buyer's market, the prices of homes were going down. But now that we're kind of in the uptrend, price of homes are going up and interest rates are going up. This is a recipe to get in now. And this is what I mean by research. You have to do your research, and this is a good place to start. So, knowing the current interest rate, and the reason why you need to know the current interest rate is because when I tell you to shop around, or sorry, when I recommend that you shop around, I can't tell you what to do. You do you. But when I recommend that you shop around, that's the phrase that you're going to hear a lot. Shopping around means comparing different lenders' loan estimates. That's what it really means. Because at the end of the day, I recommend you get three. You get three lenders to pull your credit. Now, I don't want you to get eight. Okay. I think that's just going overboard. I need you to get three lenders based on your research. Okay. You can easily research best VA loan lenders, this month, April of 2023. Best VA loan lenders in January of 2023. Excuse me, see who's been on a trajectory of having some of the best VA loan rates. And then you can either call them up or you can fill out the form on their website, and that's going to give you a little clue. Maybe they'll do a soft pull, but do not accept a hard pull just yet. Okay. So, step three, choosing a lender. Now, the choice of choosing a lender came down to, what did I say? I said loan estimates. I recommended three. You're going to compare the loan estimates, and then you're going to make these banks or credit unions or creditors, whoever, you're going to make them compete, because some famous company has a catchphrase. It's called, when banks compete, you win. That is real. I had a loan estimate one time. This was just a online bank. It wasn't like a major bank that anyone knows of, but I had a loan estimate one time because, remember, I'm going off who's giving me the best deal. That's who I'm going with. There's no loyalty. There's no loyalty in this. All right, that's out the window. Who's giving me the best deal? Because remember, these guys, they're usually going to sell your loan shortly after. Right? There's no loyalty in this. So don't get into a fritz over, oh, I need to go with the bank across the street. No, they're going to sell your loan because they're under Freddie Mac and Fannie Mae guidelines. Freddie Mac and Fannie Mae are going to sell off your loan to a different bank, a different institution entirely. That's why one of the loans that I have, this isn't a VA loan. One of the loans I have, it's not backed by Fannie Mae or Freddie Mac. So they never have to sell the loan. They keep it in house. This is a benefit to the type of loan that I did for that deal. One second. Sound is bad. Give me a second to fix the sound, guys. Okay, I got people in the comment section doing research. Uh, sorry, I just got a message that my sound is bad. How's the sound? If anybody can give me something in the comment section. Anyone in the comment section, can you give me an idea? Okay, the sound, I think it's better now. Okay, sorry for stopping the stream there, but we are we are at okay, we are at choosing a lender. So a lender is going to be either a private bank, a mortgage company, a credit union, and the lenders are going to offer different interest rates, different loan types. So you're going to have to shop around, and you're going to have to compare loan estimates from these different lenders. Lender A versus lender B. Look at the interest rate of lender A. Look at the interest rate of lender B. Look at the closing cost of lender A. Look at the closing cost of lender B. Look at the APR. We don't forget about that APR, the annual percentage rate. Look at the APR for lender A, APR for lender B. Okay, they should be fairly close. If A, B, and C, if somebody's too far off, they're done. You're done with them. No more. Okay. Step four. choose a real estate agent. Now, this is the part where I'm going to give you my recommendation. I am a big fan of new construction properties. A real estate agent is not necessary for a new construction property. Here's why: it is necessary to have a buyer's agent. It is not necessary to have someone going, driving you around a neighborhood from house to house, checking out the different deals in the neighborhood. I recommend new construction because they usually make the home buying process pretty easy. And you get a new construction property, a property that is not 50 years old, a property, even though property values increase, a property that's usually going to increase with the value of other properties around it as well. Okay, so new construction doesn't exist in a vacuum usually, it's usually a community. So I look at new construction as an investment. Also, you don't have to really bid for new construction properties. You just have to be the first in. That's that's where I want you guys. I want you guys to be doing this research 8 months ahead of time so that you can be the first in that new construction property. Let's say you're going to PCS, you're active duty military, you're about to PCS to San Antonio. And in San Antonio, there is going to be a new construction build in the neighborhood, near where you work. I want you looking at that 8 months ahead of time. I want you closing on that as soon as it's done, basically. I want you to organize your PCS um, towards your closing, basically. As soon as it's done, maybe within that month, close on it, and then you're good to go. But a real estate agent outside of new construction can be helpful. You definitely want to shop around, not shop around, but you want to ask for recommendations. Also, someone knows a real estate agent. Someone in your family may be a real estate agent. They have access to these real estate agent databases. They can tell you who could possibly within their real estate agent networks could be a good agent, in a different city, in a city that you're going to be going to. So when it comes to new construction, your buyer's agent is not really that necessary. I recommend having one so you have someone that has your best interest, because if you use the buyer's agent for the new construction build, they have the builder's best interest at heart and the builder's lender's best interest at heart. You want someone on your side. You don't want to come into this naked. All right. You don't want to come into this knife fight with a toothpick, basically. All right, shop for a home is the next step. So, step 5, shop for the home. Now, I recommend step 5 before finding a real estate agent if it's a new construction. I want you to look for the home before you have the real estate agent. Okay, and then you go find a real estate agent. Say, hey, I already got the property picked out. I just need you to come with me on signing day, collect your little commission. You don't have to phrase it like this. Collect your little commission, and then it'll be the easiest, few $1,000s you've earned. Okay. You did all the work for them. And they'll probably show up to, signing feeling like they didn't have to do much work. You did all the work because I need you to be that knowledgeable. I need you to be that knowledgeable that you did all the work. All right. So, some helpful tips: know your lender's credit requirements. Hopefully, everybody has over a 760 credit score, and you don't have to worry about credit limit requirements. Know your credit history. Check annualcreditreports.com. You should check that annually. Okay, don't you can't um, check annualfreecreditreports.com more than once a year. So it's a once a year benefit, but also if you have a credit card or a bank account, your bank is usually going to give you access to your credit score. But annualfreecreditreport.com has a verbose list of things on your credit. It doesn't give you a credit score. It just gives you everything that's on your credit. So you know what you're working with. And we already talked about shopping around for a lender. You want to compare these loan estimates. You want to make sure interest rates are competitive, because if lender A has a lower interest rate than lender B, but the closing costs for lender A are slightly higher, you need to start weighing that. And you need to go to lender B and say, hey, lender A is offering me a lower interest rate. Can you match that or beat that? Lender B might say, you know what? I think we have it. We can probably match that or beat it. And then they take it down. I've done this. I've literally done this where with comparing loan estimates because I wasn't getting their best. I said, hey, I'm getting a really good interest rate here. Can you beat that? Not because I'm like, oh, I think lender B, I want to do business with them. I don't care. I don't care who I it doesn't matter because they're going to sell your loan anyway. It doesn't matter. I don't care how smooth talking the the loan officer is. These guys are trained. They're trained for this. They do this all day, all the time. You're not the first one in. You're not the first one that they've convinced to go with them. So I need you guys on your toes. I need you guys watching out for these tricks. But you're in the right place. By the way, hit the like button if you're joining me on the replay. Really appreciate that. Increase that watch time too. Make sure you share this video with someone who you know in the military because this video can literally catapult their family's wealth. I'm not lying. I'm not kidding. And I'm not mincing words. This could catapult your entire family's wealth just by watching this and knowing the ins and outs of the VA loan. And if you're interested, uh, if you're interested in content like this, I don't only just do this Noble Credit podcast. I do YouTube videos where I talk about credit cards. I talk about active duty military benefits. I talk about credit cards for, I talk about basically the best credit cards on the market. I talk about investing. I talk about a lot of personal finance and financial education. I give financial education tips as well. So definitely subscribe to the channel and hit the notification bell when you want to be notified when I go live like this because I'm coming with the content. It's Noble Credit, man. Like the video. All right. So loan terms for VA loans can be 30 years or 15 years. Uh, you want to be you want to be in that 30 years lane because even though 15 years is going to be a lower interest rate, I'm more concerned about with you spending less money to get these assets. A 15-year mortgage, you're going to be paying more monthly. Now, you might be someone who you're like, oh, I just want to get my mortgage paid for in the shortest amount of time. Okay, do a 30-year mortgage and then pay toward the principal just more every month. Don't saddle yourself to a 15-year mortgage because you think you need to pay this off in 15 years or you want to pay it off in 12 years. Okay, get a 30-year mortgage and just apply more to your principal because the opportunity cost, you never know what's going to happen in the future. You don't know what's going to happen next year. All right. So the difference between, let's say you have a opportunity for a $700 mortgage for a 15-year, or you go with a 30-year and you have a $950 mortgage. That's an extra $250 a month. In the grand scheme of things, yes, it's a lot of money. But what about in the short term? It's not that much money in the short term. So don't don't um, don't lock up all your capital just because. Excuse me. Sorry. The 15-year would be 950, and the 30-year would be 700. Don't lock up all your capital in the beginning when you don't have to. You can always pay more later. Remember that. I don't want people uh, getting mixed up with getting 15-year mortgages when they certainly don't have to just because they want to be financially responsible. You're being financially responsible with a 30-year, all right? Even for a VA loan. Okay, you can get a fixed or an ARM, a fixed interest rate or an adjustable rate mortgage. Now, an adjustable rate mortgage, it sounds bad. It sounds like, okay, they adjust your interest rate so you can pay different amounts every month. It sounds bad. Technically, it is bad because the interest rate can hike up, let's say 2% within the year. And the lenders totally within their power. You signed the documents that said that they could do that. Now, That only occurs when interest rates go up. When interest rates go down, your interest rate's going to go down. Now they're going to cap it. Let's say it can go 2% up and go 2% down. Uh, but sometimes an arm is necessary, such as if you're doing something unconventional, again, kind of an unconventional loan. They're like, we want a little bit more out of this guy. Let's give him an arm because we can't give him a fixed because he doesn't qualify. Maybe his DTI, his debt to income ratio, which is something that I this is my first time mentioning debt to income ratio. Your debt to income ratio is the amount of debt obligations that you owe compared to your income. Usually, you want to have your debt to income ratio below 45%. That's going to get you in the door of most loans. Okay. Anything above that, you're going to have some issues, but it's still doable. Now, the VA loan is a little bit more lenient, a little bit more willing to work with you. And sometimes, uh, that gets thrown around a lot. I've seen conventional loans, people willing to work with them as well. Excuse me. So don't necessarily throw out an arm, but it's not ideal. You don't necessarily want that. Okay. So I've walked you through uh, the purchase process. So you're going to get your certificate of eligibility. You're going to go do your research, understand what a VA loan is, look at your current financial situation, make sure your credit score is good to go, make sure you don't have any outstanding debts that you're paying a bunch of money on. Okay, if you have some student loan debt, okay, if you have a credit card bill here and there, uh, make sure your credit is good. That stuff is going to be fine. You don't want to be taking out a bunch of credit cards, up until you're getting your mortgage. Now, we throw this around a lot. In my experience, I've gotten credit cards right before I close. Not I don't recommend you do that, but I was in a situation where I bought a house and I didn't know that I was going to be buying that house. So I had just taken out a credit card and 2 months later I was moving into a house. It wasn't a big deal. Okay, people think, "Oh, you can't take out a credit card, within a year of getting a house." That's not true. All right. All that's going to happen is the lender is going to say, "Hey, you took out a credit card. What type of debt obligations do you have? We just need you to write a letter." That letter is just an email to us saying, "What did you take this credit card out for?" And that's it. I've never had any issues because usually when I'm taking out a credit card, even if it was months ago, I'm never really carrying an interest. Um, Hang on, let me read these comments. I see Scott Larray says, "What's up, fam?" What's up, man? Uh, he says, "Mr. Lyles." My last name is Lyles too. Do we have relatives here? All right. Scott Larray says, "I used the VA loan in 2009 to buy my first home. It's under contract to sell right now. Second best investment ever." Scott Larray, if you're still with us, what was the first best investment if that home that you bought in 2009 was your second best investment? And if you are just joining us, please hit that like button. I'm giving you grade A content. I don't know another active duty service member actively doing things like this, guys. So hit the godforsaken like button for me. Appreciate it. Thank you. All right. So back to certificate of eligibility, looking at your current financial situation. They tell you don't take out credit cards. I've taken out credit cards 2 months before I close on the property because I didn't even know that I was buying a home. Sometimes this just happens. Buying a home just happens. It doesn't happen in a vacuum. It doesn't, like, you don't just wake up one day and buy a home, but there's some prep work uh, that happens. Now, let's talk about, I touched on new construction, but I didn't touch on if you need to actually buy a home that hasn't been newly constructed. If you need to do that, there's going to be more need for your real estate agent because you're going to have to try to negotiate and have your seller pay some of your closing costs, and you're going to get into a bidding war. um, I don't recommend that, especially not for first time. So that's why I recommend new construction. And I think new construction is going to hold its value and increase in value. But And considering that you can do it, I just like new construction. Um, let's see what else. Guys, I think I've touched on everything. Let me check the comments to see if there's any questions that I can answer. All right, we got Scott LeRae says he invested in Tesla stock in 2019 was the best investment. Ooh, that's pretty good. Gabe's Gone says, "Are you on the East Coast? West Coast home values are plummeting." Okay, so I am currently on the East Coast. West Coast home values are plummeting. Yeah, uh, those folks over in California, yeah, because the mass exodus. Everybody left or is leaving for Texas and Florida. Um, Actually, it's increasing the property values of uh, some places in the Midwest. But uh, yeah, those of you on the West Coast, I do kind of feel bad for your property values. So sorry about that. But that Scott LeRae, Tesla stock in 2019 was his second best investment. You got to kind of wonder if it's his second best investment, how much he must have made off of that. Because a home value after what would be 14 years, that thing that thing should be paying him pretty well off of that sale. Okay, he says Scott LeRae says I'm active duty Air Force retiring in a couple of months. Congratulations and thank you for your service. He says I'm a fellow YouTuber. Glad you back from your YouTube break. Been following for a minute. Appreciate it, Scott LeRae. Uh, yeah. Thank you for your service. If you're retiring from 20 years of service, thank you. If you're retiring from more than 20 years of service, thank you for your continued service and really appreciate you from a fellow service member. I love when I see that people can retire from active duty and then set themselves up for the rest of their lives, set their families up for the rest of their lives, which is what I'm trying to get you guys to do. And the way that I think that you should do it is get property. uh, some people are going to disagree with this, but I think investing in your TSP, at least getting the government match for the free money, starting a business, I think even if you're active duty, I think you have the ability to start a business, especially if it's something like getting property. You can rotate that into an LLC, and now you have rental properties out there. Now they're not all necessarily going to be VA loans, just because it's going to be very difficult to get that many VA loans, but you can do it. And then you need to be good at your job. You need to be good at the thing that you do every day so that you can fund all of these other ventures that can eventually pay you for the rest of your life. Get your properties rented out, have your business working, have people running your business for you, build that up. So that's how I would like to see you guys building wealth. And a training like this, that's what that's designed for. I'm trying to instill that in you. So I hope that it works. And yeah, so thank you for everybody that joined the chat. Any other questions that I can answer, I'd be happy to. Welcome to the stream. If you just joined us, I have a feeling that this video should do fairly well. So uh, we'll go ahead and end this stream in a minute, and I'll do some closing remarks. Scott Ray says, "Tell us about yourself. Your subscribers are interested." Yeah, I'm active duty Navy. I'm doing this training right now because I really want to help people move into properties and get started building their wealth. I came from not very much. I really started from the bottom. Now I'm here, but starting from the bottom and trying to build my family's wealth up. That's kind of what I'm about. And that's kind of what this channel is about because uh, I'm trying to help you get your credit in order. And all of the content that I produce, it's designed to get you to this point where now you can fund these properties. And one of the things that I'm trying to do is I'm trying to stick rental properties under LLCs and then have these businesses, outside of, other business ventures, have these real estate businesses. I'm trying to have them be able to pretty much pay for other rental properties. So gain loans for other business ventures, um, to maybe buy multiple plex properties. I think that that would be using the bank's money to fund some investments, which I think is really smart to do. Um, so we have some more people that just joined us. So Scott Lorraine said, "Tell us about yourself. Your subscribers are interested." Yeah. So that's what I'm about. Uh, what got you into credit cards, real estate investing? So what got me into credit cards was, and I've told this story many times in many videos or in a few videos, especially the "What's in My Wallet" video from January. I told the story about how there was I had an LPO in Hawaii. He gave me his platinum card. Where's my platinum card? It's somewhere around here. Got it. He gave me his platinum card and he told me to go to the store and buy something for him because we were on watch. And I felt it and I was mesmerized at that point. And so I asked him all types of questions about it and he wasn't able to answer anything. And that's when I did my research and I went on Ask Sebi and Credit Shifu. I think that was the name of his channel at the time. And then I got all the information for myself. And I was so jacked up over this credit card stuff and getting free benefits and things like that that I tried to tell, the people that I work with, I tried to tell the people in my division about it. And they were not having it. So then that's when I quickly realized I got to reel it back. But I need to share this information, but I can't share it with, these people that are so close to me that they could get annoyed. So I decided, you know what, I need to go on YouTube. And that's when I started the YouTube channel and started uh talking and rapping about credit cards. Okay. Gabe's Gone says, I'm looking to buy another home. I'm just waiting out the dip in Las Vegas. I bought here at the end of 2011 after a 60% drop from 2006 values. Yeah. So Vegas is one of those interesting markets, uh, just waiting out the dip in Vegas because Vegas was it was a very hot market. Like, uh, like real estate. I know one major YouTuber. There's a couple major YouTubers that have kind of uh, led the way in making Vegas hot. One being, um, what's his name? Big financial YouTuber. I'm forgetting his name right now. Graham Stephan, I think he's kind of led that way, but also just the area. Like I love Vegas. I've been to Vegas a number of times. Um, you said you bought there in at the end of 2011 after a 60% drop from 2006 values. Yeah, you probably got really good value out of that. That's nothing but 3 years after the recession, the housing crash of 2008. If you don't know what the housing crash of 2008 is, basically, too many people, subprime borrowers, had mortgages and then they weren't able to pay for them. So the housing market would eventually collapse because lenders or the big banks, the big institutional investors, they had bet on these mortgage backed securities and they lost because, these houses were getting foreclosed on. Some of the major ones, they they ended up, those banks ended up going down, and so these were major investors. These were major investments. People had 401ks involved. So if you're young and you don't remember that, that's what that was. And so that created a housing market crash and it affected the entire United States, the entire world, really. And when housing markets, when the properties, went down in value, those who came in and swooped up, they probably got pretty decent deals out of it. So I imagine that's where you got your property at a 60% drop in value. But now I guarantee that property is probably doing pretty well. Um, Scott Lorray, he did ask me what got me into real estate investing. So I didn't answer that part. The part that got me into real estate investing was uh, In Hawaii, when I was stationed in Hawaii, I had pest control stop by my house because I was clearing out of my apartment at the time, and the pest control guy was like, "Hey, you need to get a house." And I thought about it. I was like, I don't know anything about getting a house," and I didn't get a house at that time. But his name was Sydney, and he put that thought in my head, and I never forgot it. And I never forgot his name, but I lost his business card, and I wish I didn't because he changed my life. Because then eventually, I would start gathering properties and adding them to the portfolio, and it really started with him. And later on, when I ended up getting my first property, I realized the amount of information that I knew already going in because I'd done so much research. And then I realized, wait a second. I can kind of tell other active duty service members how to do this exact same thing. Now, excuse me, I'm not going to saddle them with same thing as the credit card situation. I'm not going to saddle them with all this VA loan news and build your real estate portfolio, invest. I'm not going to do that. I'm just going to get on the internet and do it. And I'm going to reach out to people who want to learn about this stuff. So I hope the people that tune into this channel want to learn about real estate investing, credit cards, and the, the trajectory of the channel is teach you about credit cards so you can do things like this. So you can always have good credit scores. So you don't really have to worry about that. I learned that that's one of the things that holds people back from doing real estate investment is their credit scores aren't up to par. And I'm like, that's an easy thing to get right. But everybody's at a different point in their journey. So that's why I want to help people improve their credit scores so that they can uh, get to a point where they can start building that portfolio. And also, uh, I want them to be contributing to a retirement account of some sort. I would hope that they would do a Roth TSP, and I hope that they would invest mostly in the C fund, which tracks the S&P 500 index, which I recommend. Uh, just because of historical returns. But you know, you kind of that would just be my recommendation. I cannot tell you to do that. Scott Larray says, "Have you ever thought about buying a home outside the U.S.? I'm concerned to buy a home in Rwanda and or South Africa. No, I actually haven't, and the reason why is because am I work in the intelligence field, so having investments outside of the U.S. is kind of a no-go because that ties you to another country's interests over the United States, unfortunately. And so with a top secret security clearance, uh, you would have to report that, and then that would just be way more paperwork than I would want to even start. So I just kind of focus on the United States for the time being. Gabe's Gone says, stay on top of your potential disability rating. That's right. You'll pay less in taxes depending on your rating. I'm actively doing that now. So hopefully I don't have to get out of the military anytime soon and I can retire, when I want uh, at the end of my 20 years or whenever I decide to get out. Uh, but yeah, I will be staying on top of that disability rating because I think that even if there's something not seriously wrong with you, let's say you wanted to do a sleep study, you can get like 50% disability for a sleep study. So disability is good. Gabe's gone mentioned property tax. Oh, you were saying property taxes, pay less in property taxes. That is also true. I also am a little bit more strategic, except for where I have to live. I'm strategic about real estate investing because of property taxes, because I'm about spending as little money out of pocket as possible. So one of the biggest expenses that you have for your house every year is going to be your property taxes. And I'm a fan of, you know, I'm weighing the costs of investing in counties or states with higher property taxes. Uh, because I want lower property taxes, but I understand sometimes there's give and take to it. So that is what I think about. I don't think many people think about property taxes, but that is the real money that comes out of your pocket every year. Luckily for Florida, I at least have the homestead exemption, which cuts a couple $100s off, which is really nice. Scott Larray says, I'm embedded in an Intel unit. That's why I had to wait until after retirement. Nice. Wait for what until after retirement? Sorry, I'm looking up to see what you meant by wait until after retirement. Oversee home ownership. Oh, okay. I gotcha. Yeah. So after, I think it might like because properties are fairly cheap, like such as think about Brazil. Okay, you can have like the mortgage on a house on the water in Brazil could be like a really nice house. Could be like $2,000. Could be like $1,500. That is technically a really good investment. Now, if you want to go live overseas or something like that, it could also be a good investment to buy multiple properties. But I think cheaper property values overseas, I think that could be a secret way to build wealth as well. I haven't thought too much about it just because I've been a little bit more focused on domestic, but overseas investing, that could be a move. And I commend you for at least thinking outside the box, literally thinking outside of the country about this. Um, If there are no more questions, I'll go ahead and close it out. Thank you guys for staying with me all this time. Hit the like button for me, subscribe to the channel. I am going to go get some food because my wife has cooked and I'm hungry. And I just finished golfing before I did this. So my hands are like a little crusty. So I got to go get well. Uh, Thank you again for joining me on the stream. Like the video. Make sure you watch the other videos on the channel. Any of the credit cards you need, I got them. Use the referral links. And last but not least, oh, thank you for that like, by the way. And whoever just joined, give me that like. Give me that HBO special, that Help a Brother Out special. Let's go. No credit. Noble Credit Podcast. We out. Peace.